Hello and welcome to Trade Maestro. Thank you for joining us. We know your time is valuable and we take that very seriously. Our presentation will begin shortly. While we wait, please take a moment to fully prepare for the presentation. First, make sure your audio is working. You should be hearing sound now. Also, please remove all distractions. The information we will be sharing is very important and we want to make sure you get as much out of it as possible. And finally, be sure to have a notepad and pen so that you can easily take notes and write down references that may be discussed. Thanks again for trusting Trade Maestro with your trading education. We will begin shortly. For thousands of years, if somebody wanted to learn a new skill, maybe learn to make boots or horse saddles, how did they learn that skill? They studied with a master. Trade Maestro builds on this tradition, the relationship between the mentor and the apprentice, but we do it all online. The term maestro means master or an artist of consummate skill. And that's what a trade maestro is. It's a person who has mastered the art of trading. I didn't want to create just another stock market trading company that sells classes. I've done that, and I don't think that's in the best interest of my apprentice. I want to walk him through the process of becoming a great trader, and you don't get there with information overload. You get there by doing it, by getting your hands dirty, by putting into practice. That's the only way to build a new skill.
I love how Jeremy teaches. I love the fact that he teaches things in such a real, practical way.
And he made me realize that I can do this.
I remember when I first started my trading journey, and let's just say I blew up at least 2 accounts.
I know this model of learning to trade works. I've had the opportunity to work with people from over 80 different countries.
And I was skeptical at first. I was kind of like, okay, are you sure about this?
I was always chasing stocks. I would always chase the next hot thing and never had an opportunity to get any profit from it.
I've helped people with trading accounts that are just a few dollars, and I've helped people with trading accounts that are over $1 million.
These courses give me a much wider perspective on what is really possible.
And what Jeremy does so well is that he breaks it down in a simple form so it's easy to understand.
They're just regular folks, and if I can teach them, I can teach you.
I didn't want to let someone else tell me what the play was and I just follow their lead. I wanted to learn it for myself.
My greatest joy is when somebody that I have taught over the last decade, they reach out and they say something like, you won't believe it, but I actually have people that are asking me to teach them how to trade. Is that okay? You think I can teach them?
Working with you taught me that, stocks go through ups and downs pretty regularly and pretty predictable.
The portion that my husband has now been able to take over and own has outperformed the market and is doing better than the rest of our retirement. It is totally life-changing.
Just to think that I touched people, I taught them to do something, I influenced a generation of traders, and now they're taking it forward and they're influencing the next.
At the end of the trade, I ended up making 140%.
It just gives me so much delight and joy knowing that I can still do something with my financial future.
This is not something that's only for other people. I can actually become financially independent.
Not only allow me to make better trades, more lucrative trades, but have more confidence while I trade.
This Trade Maestro membership is excellent because it's got something for everyone. If you're just starting out, or even if you've been trading for a while, you'll find something you like. You need to get enrolled right now. It's affordable. It's It's comprehensive. And it's risk-free because you can cancel anytime if you decide you don't like it. So if you want to learn to trade the stock market, or if you're looking to take your trading to the next level, you need to get enrolled as a Trade Maestro member right now. The following presentation is for educational purposes only. All examples and analysis are intended for these purposes and should not be considered as specific investment or trading advice. All examples are for the purposes of teaching and are not intended to suggest future results. The risk of loss in trading securities, options, futures, forex, and cryptocurrencies can be substantial. Individuals must consider all relevant risk factors, including their own personal financial situation, before trading. Options, futures, and forex are considered more sophisticated investment vehicles due to high leverage and are not suitable for all investors. Welcome, everybody. Happy Friday to you. Happy Friday afternoon to most of you. Friday morning to those of you over on the West Coast. I hope you're doing fantastic today, and welcome to Building Blockchains. I am your host, Jeremy Whaley, and it's great to be completing another week with you. And I'm looking forward to it. We got some great stuff to chat about today. We got some pretty good headlines going on. In fact, let me just tell you what we're going to be talking about. We are going to be talking about some market updates. It's kind of crazy out there today. We'll be talking about the great crypto crash of 2025. If it is such a great crypto crash. We're talking about some a fear and greed index that is tied to crypto and what that could indicate moving forward. And then I'm kind of going to change the pacing just a little bit today. I've been doing crypto basics and then some crypto alpha in terms of analysis. But today I'm just going to focus on one chunk here and teach you something about the 8 irrefutable laws of crypto. I think it's going to be a great show, and I'm thrilled to have you with me today as we are digging into this fantastic world of crypto. Every day I live in the world of crypto, I love it that much more. It is such an extraordinary technology. And it's fantastic. I can't say enough about it. I do want to say one thing real fast for those of you who've been tuning in, and I got a couple messages from a couple people about the long intro for people who've been watching the recordings. Well, the intro actually starts before the show starts. We start at 1 o'clock Central Time, and the intro starts 5 minutes before. That's so that you can get in, you make sure everything's working, you make sure the audio's working and all that stuff. And you know, the idea is that you watch live if possible. We're going to take some clips out, and I haven't gotten around to doing all those edits yet, but we'll take clips from the show, and we'll start posting some of those up on YouTube and Rumble as well. But, you know, the 5 minutes, if you're here on time, you know, you won't see it. It's just because you're watching the replay, and it's there. It's there because it's the live stream. So what can I say? Anyway, that's why we do that, just so you can get everything working and everything rocking along. So with no further ado, let's jump in. Let's do some market update because there's a lot going on. All right. It is an ocean of red again today, 2 days in a row. Bitcoin down 4.5%, down $4,755. Whew. It just feels like it's so much, doesn't it? And it is. I mean, percentage-wise, it's a big deal. And we've dropped below our support levels, so we got kind of a lot to talk about there. Ethereum's down another 2%. Solana, 2.5%, 2.4%. XRP is actually one of the not-so-bad ones today, and some speculation that may have to do with the ETFs, but I don't know if that's true. XLM kind of looking a lot like XRP, and then Cardano down 4% as well, all the way back down to 50 cents. So let's talk about these and see what we're dealing with. You should be seeing on my screen now some Bitcoin charts. I'll take it full screen so you can really see it. And what you should be seeing is a big, red candle right there. Look at that. Can you guys see that? How about I zoom in a little bit and maybe it'll be a little bit easier to see. Yeah, I mean, that sucker's just hauling, you know what, in the wrong direction. And it's been a big one. Let's clear that out because there we go. There you go. That's the one I want you to look at. So yeah, like I said, you know, down almost 5,000 almost $5,000 on Bitcoin today, 4,829. We're kind of a little bit off the lows, but not very much. There's a little bit of a lower shadow there. I told you yesterday, what did I say? Low to mid 90s. Gave you a target right here, just above 93,000. Said if this support didn't hold, well, it didn't hold. It didn't hold, and that's where we are looking at right now. Does that mean that crypto as a whole is in a massive crash? We're going to talk about that. It's kind of one of the major stories to discuss right now is what's going on with crypto. Are we crashing? Is this thing done? The very narrow view, I'm going to zoom in here and I'm going to show you the narrow view. And what I mean by narrow is you're not really giving yourself a fair assessment. If you look at this picture right here and you say, well, back in October 6th, Bitcoin was 125,000 and today we're at 94,790. If you look at it from that perspective, it looks devastating. But that's the narrow view. What I want you to understand is I want you to zoom out. I want you to always remember, zoom out. If you want to get a good perspective on where things are, you have to zoom out and get a perspective. And when you zoom out and you see the big picture of crypto, specifically in this case, Bitcoin, now you start to see the full story. Now, it was earlier this week I taught you about trend lines, and I'm going to draw one in here, breaking off of our main turning point back here. And notice what happens when I draw this trend line in here. Boom, 1, 2, 3. Look at where everything lines up. We're actually at that ideal spot. So, am I freaking out? Well, I'm going to be honest with you. No, I don't freak out, typically speaking. But I'm going to be really candid with you. I did sell a good portion of the Bitcoin that we had. And I did that just to avoid big drawdowns. And that's just being judicial. That's being smart, okay? Doesn't mean that I'm done with it. Doesn't mean that we're collapsing. It doesn't mean that it's the end of the world or anything like that. I just simply said, okay, I'm not going to leave myself exposed in that. We'll go back over to stablecoin and we'll sit there for a little bit because we are in bearish trend. We're below the moving averages. Averages are red. It's just the smart thing to do to sit in cash for a little bit, okay? But I actually don't think that we're in a bear market. And all the headlines where people are saying, oh, it's crashing, it's over, this is terrible. I actually don't buy into that either. And I'm going to show you some reasons why here momentarily. Before we get there, I want to show you another chart. If I can get that one off. There we go. This is Ethereum. You're going to notice that Ethereum actually is finding support here. Ethereum doesn't look nearly as bearish today as you see these long lower candlestick shadows here. We're starting to build support right around 3,200. So that's a good spot for Ethereum and it feels good. XRP has not breached our 209 support. XRP is held strong right here. It's building a much stronger support up here around 230, and that's why it's not down as much. Same thing with XLM. XLM, even though it wasn't one of the lines we had drawn, XLM is building a pretty strong support right here around 27 cents. Now, I personally think XLM is going to get on down to 24 cents. And if we do that, if we can hit down there and start to bounce, I will be buying a good chunk of XLM because I'm a fan. But today is not the day for it. And Solana, notice where we're finding support on Solana as well. So again, you're seeing the picture, hopefully you're seeing the picture, that while the headlines are very bearish, while people are freaking out about stuff, while yes, the ticker tape is red, maybe it's actually logical. That's what I want you to see. I want you to see that the markets aren't as chaotic and unpredictable as maybe one might think. It's actually probably the most healthy thing that can happen right now was to have some selling. And again, I'm back on Bitcoin here. I'm going to zoom out a little bit. I want to show you, because this is going to set us up for the next segment. I want to remind you, when we first started doing these about a week ago, I talked about this idea of consolidation. And yesterday, I talked about the idea of distribution. We talked about the 3 phases of a trend. And I talked about accumulation, public participation, and distribution. And this consolidation has been happening on Bitcoin since July. That's what you got to realize. The big run for Bitcoin, we had one last fall and we had one in the late spring, early summer. And since July, Bitcoin has been consolidating. This is a distribution period. Okay, we talked about that yesterday. What is distribution periods? When the people who started the move start closing out their positions. What did I say just a few minutes ago? Did you catch what I said? I actually closed out my Bitcoin positions and actually went to cash. So maybe I'm an informed trader. I don't know. You can decide if I'm informed. Maybe I'm an idiot. I don't know. I'm just telling you that while a lot of people are sitting here freaking out, I'm not. And I'm not because we're reading what the charts are telling us and we're analyzing that. And we're making informed decisions. Okay? This is a consolidation period. And what we need to happen with consolidations is we need them to break out. That's why I'm actually very happy about this breakout. Because this breakout, which looked like it may get stuck here around 100, has actually dropped all the way back down. We've connected with that trend line. And what I'm looking for now is the reversal and starting to move higher. And that will make this a great buying opportunity. A great buying opportunity. Now, it's not time to buy yet. Really getting close, I think, but it's not quite time to buy yet. And you say, why not? Well, I'm going to talk to you about that coming up now in the next segment, which we call the Crypto News. As always, the news media is having a heyday with the bear market that has started to roar, as they like to say, around crypto and specifically around Bitcoin. Here's the headline on CoinDesk today. Crypto markets, Bitcoin breaches $98,000 as liquidations top $1.1 billion. That sounds terrifying. I love how they write the headlines. One of the things I want to draw your attention to here, I'm going to leave this up for a minute. This is complete fear-mongering. You say, well, it's true. It's down, below 95. I mean, so yeah, 98, that was true. And that is true. That's a fact. Okay, it's down below 98. That's just a fact. As liquidations top 1.1 billion. Really? Where's that number come from? I'm going to tell you where it comes from. That number is, I'm trying to figure out where I want to write this. That number is referring to market capitalization. You often hear in a bear market, the stock market lost $1 trillion today. Or Bitcoin is down, in this case, $1.1 billion. Come on. It's market cap. And while I understand and appreciate market cap, this is a number that really matters to nobody. It doesn't matter at all. What market capitalization is, in the case of stock, it's the number of outstanding shares that you have. And in the case of times the stock price, in the case of crypto, it's the number of coins times the current price. Okay? The number of outstanding coins times the price, or coins in circulation. There's a fully diluted value. That's if everything was in circulation, and there's just what's in circulation right now. And so if you have, we'll go really basic here. Let's say you have 10 coins in circulation. Very simple math for us here. If you had 10 coins and they were worth $10, you have a market cap of 100. Okay, that's what a market cap would be. Market capitalization just simply means this is the number of coins in circulation times the current price. That's the market capitalization. That's the overall, if we were to sell everything at this price, if someone were to buy everything at this price, it would take that much money. Okay, that's how much money is flowed into it if you want to look at it that way. But that's what the value of it is. It's the market capitalization. Now, it's not really that practical because nobody's going to come in and buy up all of Bitcoin for $2 trillion. That's not going to happen. And in the same way, no one's going to come in and buy up an entire company for whatever their market cap is. It's just putting a value on it, saying, well, all the shares that are outstanding and the current share price, this is the value of the company. And so people can say that about Bitcoin. And then let's say that you've got a situation like what we've got with Bitcoin today, where, the price has gone from 100,000 down to 95. And so that's $5,000. And if you were to multiply that times outstanding coins, and you were to look at the difference, you would say that $5,000 represented approximately $1.1 billion of market cap. But it doesn't mean that somebody actually sold $1.1 billion in losses. It doesn't mean that Bitcoin actually lost $1.1 billion. It's a number that stirs emotion. It stirs fear, but it's actually not necessarily true. And here's the crazy thing. For all the people that love to say in a bear market, oh, Bitcoin lost $1 billion, or the stock market lost $1 trillion this week. For all the people that love to say that, exactly zero headlines ever say whenever Bitcoin went up $5,000 in a day, Rarely do they say, oh, Bitcoin's up $1.1 billion. They don't say that. Why? Because they're using this to stir fear and to get your attention. That's why. And so, once again, I'm just always on this rant of dissociate from what the headlines are telling you, because the headlines are telling you a narrative that they want you to buy into, but it doesn't necessarily mean that it's a narrative that you need to pay attention to. All right. So that is the narrative going all around crypto today. Bitcoin's down. Are we in another crash? Take a look at this one. This is a Yahoo Finance. You'd like to think they'd be better with their narrative, but no. Crypto markets crash. Here's why Bitcoin, Ethereum, Solana, ZEC, and other altcoins are falling. Everybody wants to know the why, right? Well, there's something that caught my attention in this article, and it talks about all the normal stuff that everybody else is talking about. I don't need to highlight all that. By the way, most of those are correlations that don't matter, most of them. But this one right here got my attention, the crypto market fear and greed index. Okay, that one got my attention. Let me read this one to you. The crypto market fear and greed index has further slipped to extreme fear at 15 today. This indicates bearish sentiment among investors and potential for further drop in crypto prices. I'm so glad that they wrote that, because now we all know to panic. But you're not going to panic, because you're going to listen to the next segment that I've got here. So listen to what it says. The fear and greed index, in and of itself, that stirs fear, because it just sounds like it's official. It's slipped into extreme fear. So what does the brain says? The brain says, uh-oh, things are bad. Indicating bearish sentiment among investors, okay? Potential for further drop in crypto prices. What is it suggesting? It's suggesting that we're just right at the beginning of a really, really bad market. That's what it's suggesting. So I want to come over to the fear and greed index. This is on CoinMarketCap. Now, there's a lot of different fear and greed indexes in the world of finance. This is one that I'm not sure what their formula is, but this is one that CoinMarketCap has put together. I'm going to take it full screen so you can kind of see it a little bit better. You can find this at coinmarketcap.com/chart/fear and greed index. You can Google that too, and you'll find it. But what I want to show you, this line here of the green-yellow transition, it's this right here. Okay, so it actually is at 22 right now, not 15, but it's at 22. As you look at that, it looks like it's full of fear, right? I want to show you on the chart here, if it was over here on the far right, if it was bright green, then it would be reading up here. If it's bright red, then it's reading down here. You can see how that works. Hopefully you can see that, okay? So I want to show you where this is on the chart. The white line, if you can see it in there, that's the actual Bitcoin price. And the fear greed index is sitting right here at 22. Well, if you look back in time. Last time we were here, how much further did Bitcoin fall? Not very much. That was the bottom. The previous time we were here, how much further did Bitcoin fall? Not at all. It was the bottom. The previous time that the fear greed index was low, what happened to Bitcoin? That was the bottom. There's a philosophy in trading called contrarian investing. When the herd moves one way, the informed trader moves the other way. Because by the time the herd figures it out, by the time the masses figure it out, usually it's too late. Now, on this fear greed index, it's really fascinating, because if you look at it from a different perspective, let me clear these drawings out. And if you look at this from a different perspective up here at the top, when we were very, very excited, when it's starting to get green, what happens? Bitcoin stops rising. When it's very, very excited, what they would call extreme greed, Bitcoin is getting into a consolidation that lasted for months right here. Right here, where we're excited and we're getting into extreme, what they would call greed, we were at a market top. Right here and here, when you're getting pretty high, we're coming into a market top. And this is actually an interesting picture right here, because it created something that we refer to as a divergence. If you can see the white Bitcoin pricing back here, it kept making higher highs for about a month before it flatlined and got into this consolidation. And during that time period, the fear greed index started to fall. That is what we call a divergence, and it is a precursor to a bearish cycle. Well, we've been in that now. We've been falling. We've given back 25%. That's your bear market. Okay. Now, does that mean that it's done? Not necessarily. We haven't seen that the turn has happened yet. It might hang out here for the next 3 months. I don't know. This is not a timing indicator. This is an indicator simply of momentum and showing where we are in the cycle. But what you can see is now that Bitcoin has fallen to 90, whatever it is, 94, 95, the fear index has started to ramp up. We're back down into the fearful area. Now, we're not into extreme fear. We've only hit that on this fear greed index twice, and that happened earlier this year, back in March. Okay, so, and what was that? That was a 25% pullback. So the reason I'm making a big deal about this is I want you to put these headlines into a perspective. I want you to have a filter on it the way that I look at it. The way I look at it is, okay, we're probably coming into the bottom soon. What the news media does is they get full of fear. They perpetuate fear. Number one, because it gets more people to look at their articles. Fear is the number one driver of views. So more eyeballs means more ad revenue. I mean, look at all these advertisements on here. Let me ask you a question. Speaking of that, when you look at these news outlets, you look at CoinDesk and you look at Yahoo Finance, are they making money buying Bitcoin? No. How do they make their money? These advertisements, Lay's, Capital One, whatever that one is, Amazon, some car dealer over here, Greek God's yogurt. That's how they're making their money. How do you get more people to pay you for advertising? You get more views. How do you get more views? Write headlines that scare the absolute snot out of people. Scare them to death. They're going to read my article. Read my article, I get more views. More views, I get more ad revenue. That's why your headlines are always full of fear. Read between the headlines and you might see the real story. Fear greed index really low. We come over, we check out the fear greed index, and it turns out when you interpret that market data and you look at that, you realize, oh, okay, actually, when the fear greed index is really low, when it's high on fear and low on greed, that's usually close to or at the bottom of the move. So should I be afraid? Never be afraid. Never be afraid. In fact, you can even make that like a biblical principle. Like, the Bible says all the time, don't be afraid. Because from a place of fear, you make really, really bad decisions. And the same is true with your finances. The same is true with your trading and everything that you're going to be involved with. If you do it from a place of fear, you're going to make consistently bad decisions. What I want you to learn to do is dissociate from the fear and look at the situation, see the situation as it is, not worse than it is. Don't be, overly, what's the word I'm looking for? You don't need to be like irresponsibly optimistic about it, but just don't buy into the fear. Buying into the fear will lead you down really, really bad roads. All right? That's what I got for you today in the news segment. Tell me what you think here in the chat. Let me know. And with no further ado, let's talk about some more crypto basics. All right, today I want to leave the traditional format that I'm sticking with lately, which is crypto basics followed by some analysis. And I want to talk about the 8 irrefutable laws of crypto. I feel like this is a great way to wrap up a Friday week. And I think if you will take some notes on this, you're going to learn some stuff that will make you a much better crypto trader. So here's what I want you to understand about trading in general. Trading is scary to people only because you don't know what you're doing. And then where it becomes really dangerous, people start getting a little bit of education. They think that's a complete story. They think that's everything. They read the articles. They read a book here. They hear somebody's tips and they're like, okay, that's what I'm going to do. And they buy into it. Emotionally, they're bought into it. And once you're emotionally bought in, you're in. You're in. Could be really bad wisdom. You might be running very enthusiastically off of a cliff, but you bought in. And what I want you to recognize is these laws are laws that, will help you dissociate from the headlines, help you dissociate from the emotion. And if you can look at it objectively, you're going to have an edge that most traders don't have, especially in the world of crypto. The reason I'm doing this for crypto, I've been teaching stock trading for years. The reason I'm specifically doing this, and I'm doing it as free live streams on social media, is because I know how much the crypto community needs the education. Okay, it's just as a whole, you got 600 or 700 million people around the world that are involved in crypto that are widely uneducated in these areas. And so I'm trying to do my part to help you guys with that. So let's jump into the first of the 8 irrefutable laws of crypto. And the first one goes like this. It says the price is always fair. The price is always fair. If you're making any notes at home, I know it's on YouTube and Rumble, you're probably not making notes, but if you can make a mental note, the price is always fair. What do I mean by that? You know, what happens so often in all assets, but it's really, really pronounced in crypto. What happens so often is people say, well, you know, I don't know why it's trading at this price. Why is it so cheap? You know, it should be over here. No, it should not be anywhere. It should be exactly where it is. The price that you see is exactly what the fair market has determined it needs to be. It's called the market price. That's where the market took it. And so that is the right price. You can sit here all day long. XRP lovers, I love you too. I'm an XRP lover. Remember, I've been buying XRP in various capacities since 2017. It's a long time to be into a particular asset, right? I love XRP. And I'm telling you, the XRP followers are a cult because they buy into a narrative that's not real. It's not got real substance. They look at this various... I'm going to get some hate right now, but at least I got comments. So go ahead, give me your hate. Tell me how much you hate me for saying that your XRP narrative is not real. It's not real. What's XRP worth? It's worth about $2.30 a coin. Well, don't you think it should be worth $500? No, I don't. I think it should be worth $2.30 because the price is always fair. This is what the market has said it's worth today. Could it be worth more in the future? It could be worth more in the future, but only if the market takes it there. And you've got to understand that. The market price is always fair. Right now, the market price for Bitcoin is $94,000. That's the fair market price today. It's a fair market price. People say, what should it be worth? It should be worth $94,000. And the sooner that you realize that today's price is the right price right now in that snapshot in time, the sooner you realize that, the sooner you can emotionally dissociate from it and say, okay, wait. I don't need to be hanging on to XYZ. That's not a token. That's just, you know, filling in the blank there. I don't need to be, you don't have to be holding on just expecting it's going to get to a price. What you need to do is learn to read the price action. Read the price action, and when the fair market takes it to a higher price, you cash out and you take the profit. And when the fair market drives it down, you sit out and you wait for it to get to a bottom. And when it gets to a bottom, you become the informed investor that we talked about yesterday. You start buying, you start accumulating your position, you start building your bag again, and you ride it up to the next high. That's what smart traders do. That's what the big money is doing. The people that are complaining about the price, every time they complain about the price, they're like, I don't know why it's falling. Why is this happening? These headlines that we just saw today. Why? Why is Bitcoin and Ethereum, there it is. Why is Bitcoin, Ethereum, and Solana, why are they falling? That is a naive, probably completely broke, maybe has never traded Varinder Singh writing that article. Doesn't actually understand price action. Doesn't understand what makes the market really move. First, irrefutable law. The price is always fair. And the sooner you will believe that, the sooner you'll get out of this story that something's happening to you and you're a victim, because you're not. But the sooner you dissociate from it, and you say, I'm no longer a victim of what's happening. Instead, it's just a fact. This is the data. We remove the emotion from it by recognizing that this is the reality of the moment. The price is always fair. Next law. Markets move on emotion, not logic. Have I not beat this one into you already all week? Markets move on emotion, not logic. It is a naive question for Yahoo Finance to say, why is Bitcoin and everything falling? It's naive. I'll tell you why. Because the people who are holding the Bitcoin bags, the people who are holding all of the crypto bags are saying, I think I've got enough money here, I want to sell. And as they start to take some profits, what happens? We see the selling pressure build up. And as the selling pressure builds up, the prices fall. Is that good or bad? It just is. It's not good. It's not bad. It just is. It's just a fact. But what ends up happening when the market's really high, the emotion floods in and pushes it even higher. And when the market's in a selling pattern, which we've been in recently, the emotions flood in and it drives it even lower. This price action that you see today on Bitcoin, this huge candlestick, relatively huge, very large candlestick today, that's emotion. You want to know why there's buying showing up down here at support? That's logic. That's the informed traders saying, okay, that was a good buying opportunity. So it starts to show up. But it's emotion that drives it. As the public and the emotional traders get on board and they start to push it and push it. In this case, they're just selling. They're like, yeah, I got to sell, liquidate. I don't want to lose any more. Liquidate. And that's emotion that's driving the market. So irrefutable law number 2. Number 1, price is always fair. Number 2, markets move on emotion, not logic. Irrefutable law number 3, the crowd is always late. Man, that's a big one. I talked today already about the fear-greed index, and I said that. I said by the time the crowd figures it out, by the time the herd figures it out, we're already done. That's what this is. By the time the fear-greed index, by the time the majority of sentiment is bearish sentiment, that's a fancy word for saying feeling or emotion. By the time the feeling is all bearish and the masses, the herd, the fear-greed index has moved all the way to fear, that's the crowd. That's the crowd. It's up here at the top when everybody's just elated. That's when the informed traders start selling their positions. It's down here at the bottom when everybody's in a complete panic, when the informed traders start taking on their positions, because the crowd is always late. Irrefutable law of finance. But specifically, it's an irrefutable law of free market finance. It happens in the stock market. It happens the exact same way in crypto. Yesterday, we talked about why is crypto so volatile. This move, if it was a stock, this move that we're experiencing right now in the market would not be 25 or 30%. This move would be about 10%. But crypto is volatile. And the reason crypto is volatile is because of all the reasons we talked about yesterday. If you missed yesterday's show, you can go back and watch that. Okay? But what you need to understand is what's driving it right now is the crowd. It's the herd mentality. It's the majority of market participants. And the crowd is always late because the crowd's driven by emotion. Number 4, trends always start in silence and end in fanfare. Irrefutable law of free market finance. The trend always starts in silence and ends in fanfare. When you look at Bitcoin and you look at where we were earlier this year, let me get rid of everything so all you see is the price. Because when you see only the price and you have none of these views of analysis, that's the wrong one. Which one am I trying to click here? What's the right button? There it is. When you only see the price, in fact, most of you don't even see the candlesticks, you just see this. When that's all you look at, and that's all you look at, all you see is the elation. And earlier this year, we didn't see that. Earlier this year, we saw this. But where did that bull market begin? That bull market began back here. Right before every bull market, the chart looks the same. Right before every bull market, if you're zoomed in too close, the chart looks like that. Right before every bull market. It always looks the worst. This is what we talked about when we talked about the 3 market cycles. The news media is the most bearish. The public sentiment, the crowd is the most bearish. The headlines are the most bearish. The chart looks the most bearish. And that's when the informed traders start accumulating their position in silence. When people say, you're nuts, you're absolutely crazy, I wouldn't touch Bitcoin. No, sir. That thing was 106,000 just a few months ago, and it's down to 75. I wouldn't touch it. The informed traders say, oh, I'm in. Michael Saylor says, I'm in. I'm doubling down. I'm buying another $1 billion worth of Bitcoin. And as the price starts to rise, the public comes in And it gets louder and louder and louder. And by the time we start hitting these really big prices and we're touching up here at 125,000, it's a fanfare. People look at the chart and that's all they see. Oh, it's rising, it's rising, it's rising. I got to go buy Bitcoin. I got to go buy Bitcoin. And now they're paying $125,000 per Bitcoin instead of $75,000, which they could have done just 5 months earlier, 4 months earlier. That's because trends always start in silence and end in fanfare. And about the time the fanfare starts, what happens? We're getting close to the top. Maybe we get one more peak. There's your whole consolidation. It's been going on since July. And now we finally started to drop. And as people are starting to get really, really fearful about Bitcoin, I'm looking for the signals that say it's time. We've hit the bottom. We haven't quite hit the bottom yet. We're getting close. I believe we're getting close. But that's what the informed traders are looking for. Because trends always start in silence and end in fanfare. This is good stuff, isn't it? If you like this, leave me a comment here. Let me know what you think about that. Irrefutable law number 5. You ready for this? Price seeks liquidity, not fairness. We're still talking about emotion. Price seeks liquidity, not fairness. You have to understand how market makers work. The way that a market maker works, if you've ever looked at a book of orders, on one side of the book, you've got your ask orders, and those are limit orders to sell. And then on the other side of the book, you've got the bid orders, and those are limit orders to buy. And there's a gap in the middle, and we call that the bid-ask spread, okay? And so that spread, what's happening is the market maker has got to find a way to match those limit prices for the ask and the limit prices for the bid. And whenever they can match one, boom, a transaction happens. You have both a buy and a sell. It happens at the same time. Okay, that's what a market is. Now, when you say price is seeking liquidity, what's happening is if you have a bunch of sell orders up here at, let's say, 100,000, and you got a bunch of buy orders down here at 99,000, we've got to match the market. Who's going to crack? Who's going to be the one who says, yeah, okay, I'll sell for less? And finally, there's an order that comes in. This guy or this girl over here says, well, I can't hold out anymore. I'll sell for 99,800. And this person over here says, okay, I'll buy for 99,800. Boom, liquidity. A buyer and a seller agreed upon a price and a transaction occurred. But now something new happened. Now emotions entered the market because the ticker tape just prints with, oh, Bitcoin just dropped to 99,800. Well, now some of these people who had limit orders at 100,000 or 100,200 or 100,500, suddenly they see there like, oh no, this thing's dropping again. You know what? Get me out. And they start putting market orders in. Well, you got all this book of buy orders down here, this limit bids at 98,500. And now you got these market orders. They're like, okay, just get me out, whatever, just sell. Just sell at a market. Well, where's the market maker going to match the order? With the limit that's down here at 98,500, and suddenly, boom, it prints on the ticker tape 98,500. If you're looking at the chart, it's like, why? Because the liquidity was down here. That's where a buyer and a seller were willing to match. It doesn't mean it's the fair price. It doesn't mean that that's what the value should be. It means that that's where liquidity is. Think about it like a house. If you have a house and it's a $500,000 house and you go and put it on the market, there's some markets where in the real estate world, we call it a buyer's market. In some markets, we call it a seller's market. If it's a seller's market in certain industries, certain geographies, you see this on like HGTV all the time. What do? They go out and they flip a house, right? They buy it, they put it together a little bit nicer, and then they go try to create a bidding war and create a seller's market. And so maybe they listed at 500,000 and then they got 5 offers. One's at 510, one's at 530, and one's at 560. It's over market price. Why? Or it's over the asking price. Because the market had people in it that were willing to pay more. In some housing markets, you might have a listing price of 500,000 and all the offers that come in are below 500,000. And the seller, if they say, yeah, I really want to I got to liquidate it, I want to sell the house, they might take an offer at 480 or 460 or 450 because they need to liquidate the house. That's where liquidation is. That's where liquidity is. The same thing happens in the crypto market. That's what's happening right now. If you want to ask the question, Yahoo, why is Bitcoin and Ethereum and Solana and everything selling? Why is it all falling? And the answer is because that's where liquidity is. There's people who are willing to buy at 98,000 and they weren't willing to buy up here at 124. You say, why not? Why wouldn't they buy at 124? I don't know. You tell me. Were you buying at 124? Maybe you were, maybe you weren't. But if you weren't, who was? If there's no buyers at 124, then liquidity has to drop so that we can find a liquid market. We have to. Otherwise, we'll never have a free market where movement is happening. And that's what I mean whenever I say, let me find my slide here. That's what I mean when I say price seeks liquidity, not fairness. The market does not care what you think the price should be. The market does not care what you think Bitcoin should be worth. Michael Saylor, these guys come out and say Bitcoin should be worth $1 million. Great. The market doesn't care. Today, at this moment, right now, this snapshot in the time, the market says Bitcoin's worth 95,400. Maybe in the future it's worth $1 million. But right now, 95,400, and that's the only number that matters right now in this moment. The sooner you understand that, the sooner you can, again, disconnect to what things should be and instead say, this is what things are. Now with some analysis and some forecasting tools, maybe we can make some informed decisions and anticipate where price action is going to move in the future. But we should never fall into the lie that this is what it should be, because the price is looking for liquidity, not looking for fairness. Irrefutable law of free market finance. Number 6, euphoria and despair are the same emotion, inverted. Euphoria and despair are the same emotion, inverted. What does that mean? When you look at a Bitcoin chart and you see all the euphoria that is happening up here at the top, when you see all of this excitement, how many of you were watching all summer as we hit 120, and then we hit 122, and then we hit 124 and 125? How many of you all were watching with glee? That's called euphoria. And euphoria is an emotion that's not in check. You're euphoric about something. Oh, I'm so happy, happy, happy. It's like Will Ferrell in that movie. I think it was an Elf. You guys remember Will Ferrell in Elf? When he goes out and he'd met his father and he's like twirling in the streets of New York, dressed as an elf, of course. And he's like, so happy. I'm so happy. Everything is wonderful. That's euphoria. Despair is the exact same emotion all the way on the other side of the spectrum. Oh my gosh, what's going to happen? What have I done? What have I done? I invested the family fortune at $124,000 and now we're down to 98. Oh, this is horrible. It can't get any worse. It can get worse. It can get about $98,000 worse. Never say it can't get worse. Never mind. It can definitely get worse. I got so many stories about that. So euphoria and despair, they're both emotions. They're both just an emotional aspect of trading, and it's the same extreme, just on the other side. And the sooner that you understand that, the sooner you can start to read through the headlines and say, wait a second, where are we really at in this cycle? Number 8, the market rewards discipline, not determination. What does that mean? The market, I got out of order. Excuse me, number 7. My slides, it positions both of them. I spoiled number 8. Well, I guess I'll skip to number 8. No, I'll save it. Number 7, volatility equals opportunity. Volatility equals opportunity. When you look at Bitcoin and you see this price action, don't be upset. Don't be upset and say, I can't believe that it's moving so much. This is your opportunity. If you buy Bitcoin at 124, it's got to go higher. That's volatility in order for you to make profit. If you buy Bitcoin at 98 or at 95, in order to make a profit, it still has to go higher. What you want is price movement. What you don't want is a flat price. People love volatility when it's in their favor. They despise it when it's going against them. That's naive. If you want to trade anything, doesn't matter what it is you're trading. If you want to trade, you want volatility. Volatility is your friend. It's the way you make money. But it takes a skill. You have to develop a skill to get on the other side of that. You have to develop a skill to say, okay, when the volatility is going against me, I'm going to get out. And when the volatility is moving in my favor, I'm going to move back in. That's a skill. But it doesn't change the fact that volatility is the opportunity. When you look at Bitcoin or you look at XRP or anything else and you say, why would I want to trade this? The answer is not because it's worth something. It is worth something, but that's not why you want to trade it. Why do I want to trade it? Because it's volatile. Because the price moves. Because when there's volatility, there's opportunity to make profit. If the price doesn't move, there's no opportunity. Volatility equals opportunity. And finally, irrefutable law number 8. The market rewards discipline, not determination. The market rewards discipline, not determination. What do I mean by that? Here's what I mean by it. It takes discipline to look at Bitcoin and say, I'm going to buy down here and I'm going to sell up here. This is a disciplined approach. What's a determined approach? A determined approach is hodl. Hodl means I'm determined, I'm going down with the ship. No matter what, I'm never selling. I'm holding on for dear life. I'm determined to hold on forever. That does not necessarily make you win. Now, I know, because Bitcoin is absolutely a great long-term asset. The hodlers are going to say, well, it worked for me. It worked for me. I was smart. I started seeing Bitcoin when it was at 10,000 and now it's at 100,000. It worked for me. Well, congratulations. You got rewarded for a really, really bad strategy. Great. Good for you. Go try that on some other assets and you won't be so fortunate. But discipline, the disciplined trader is the trader who can recognize that I'm at support and I'm rallying. And whenever I'm at support and I start to go up, I'm going to buy. But the disciplined trader, not only do they know when to get in, they also have the discipline to get out. Whenever I teach discipline, whenever I teach trading discipline, I've got the wrong numbers going here. When I teach it this way. When it starts to move, you're going to enter, and this is your entry price. Now, I also teach another really, really important concept, and it's called a stop. And we're going to get out if it goes the other direction. And then we're going to set our target and we're going to say, this is where I'm going to get out. And if I enter at this price, whatever price that is, in this case, hypothetically, it's 102 because that's what the number is right there. If I enter at 102 and I trade it to 122 and I have the discipline to buy at 102 and sell at 122, that's called a disciplined, predictable trade. And I made $20,000 on that. It's 20%. Can you be happy with 20%? No, I really wanted the 200%. I know you did. I know you did. And there's ways that you can also manage the trade for the 200%, but this is called a disciplined trade. And this is what I've been teaching for years. You enter at your entry price, you get out at your target. And what if, God forbid, the trade doesn't do what you think and it starts to go down? Oh, I'm going to hodl. No, you get the frick out of there. You live to trade another day. You limit your losses. And this becomes your reward, the difference in your entry and your target. And this becomes your risk, the difference in your entry and your stop. And there's your disciplined trade. And I'm going to just tell you, you can choose to believe me or not, the market rewards the disciplined trader, not the stubborn, determined one. You can hodl till Jesus comes. I don't care. It's your money, not mine. But I'm just telling you how the market behaves. The market rewards discipline, not determination. And the sooner you choose to believe that, the sooner you can start to beat the market. So there you have it, folks. 8 irrefutable laws of free market price action. I will go back through them again so you can review them very, very quickly here. Number 1, the price is always fair. Number 2, markets move on emotion, not logic. Number 3, the crowd is always late Trends always start in silence and end in fanfare. Number 5, price seeks liquidity, not fairness. Number 6, euphoria and despair are the same emotion inverted. And number 7, volatility equals opportunity. Number 8, the market rewards discipline, not determination. Hope you guys have gotten a lot out of this. You can find me over at trademaestro.com. If you've not been over there, then please check it out. Send me an email, jeremy@trademaestro.com. In fact, I wouldn't mind if some of you sent me a couple emails because I hadn't been getting emails, and I think something's wrong with my email. And I actually need some people to send me some because I don't know where the emails went. But trademaestro.com, check me out over there. If you haven't liked and subscribed to the channel yet, it's probably about time. Do it right now. Follow me on Rumble at Trade Maestro. Like and subscribe on YouTube at Trade Maestro. If you're over on Telegram, Real Trade Maestro, Trade Maestro Official on Facebook. I hope you guys have really taken some great stuff from today. Let me know what you think in the comments. Send me a message. If you got my number, send me a text message. Thank you, Sean. I appreciate it. Let's see if this will share. Let's try it. No, still can't get that chat working. It works before I go live. Then I go live and it doesn't work. Go figure. Thank you, Sean. I appreciate it. Next week, we got some great stuff coming up next week. Same time, same place, same time, 1 o'clock Central Time, 2 o'clock Eastern. If you're on the other side, mountains, it's noon, 11 o'clock on the Pacific Coast. I hope you guys have a wonderful weekend. I wish you the best. Until then, happy trading. We'll talk to you all soon.